Welcome all my good people. This is Fast Money Future here. Fast Money Future Chris. You're at the Fast Money Futures channel and we're looking to help traders like-minded across the globe become profitable. Find a community that's willing to help them thrive and build a great commodity together. And I hope you guys find that home here with us here, Fast Money Futures. This is Chris. I'm going to be sharing with you guys today some simple but very, very, very important information and technical analysis. The beginnings of technical analysis when you're just getting started. It's very important to understand that this is going to be a journey. And I want you to promise yourself right now, you're going to fall in love with the process. You're going to fall in love with the journey. You're going to take the ups and you're going to take the downs. You're going to love the wins and you're going to love the losses, right? Because here we're going to find and implement a strategy that's going to be beneficial and profitable. Not every trade is going to be a winning trade, but the through back testing, through studying, through putting the time, effort, energy in, we're going to help you become a profitable trader through basic technical and fundamental analysis. And this is going to be your first step. This is top-down, simple, basic analysis, okay? Now, before we get started into uh, marking up our chart per se, just want to take note of a couple things. When we do our top-down analysis, there's a couple things that we want to be looking for. The first thing, we want to determine, is the market or asset that you're trading, commodity, future, crypto, it doesn't matter. If you are analyzing a technical chart, technical analysis is going to be the same on all charts that you're analyzing, right? Technical analysis doesn't change, fundamental analysis does change, right? And we'll get into that on another video. Technical analysis is what we're seeing within the information that is provided. Fundamental analysis is going to be that of maybe a news event or somebody, the president's talking for the U.S. and you have the U.S. dollar start to move or be very volatile. And that's the reason why that happens is when news events come out is traders are very emotional and traders tend to react before and after news events occur, right? And I say before and after or during and after is because when the news event comes out, majority of the retail traders, they react to that news. And 90% of the time, I'm sure they're probably wrong and they lose, right? And that's how the market thrives. And that's why we're here to teach you fundamental and technical techniques to help you understand where the market's going to turn around from, possibly where you could find some sniper entries. But we're going to get in through that throughout this whole educational session and section of Fast Money Futures here on YouTube and all social media platforms. Make sure you do hit the like, subscribe, and follow if you found value in this. Well, let's get into the video, guys. The meat and potatoes of this video, I should say. So, when you are looking at a chart, you have directional bias. You have the market moving down, or you have the market moving up, or occasionally you have some sideways movement, which is going to be considered consolidation, right? Now, if you have the market moving in an uptrend, what you're going to see visually is you're going to see the market creating a high, pulling back, creating a higher low, and then going on creating a higher high. So if the market in this uptrend pushed up, came down, created a higher low, this is your low. And if the market pushes up past this previous high, thereafter, so that whatever move comes after this previous high, we then will have created our new high. So this was our high, this was our higher low. Now this becomes our higher high, okay? So just because this becomes our higher high, now in order to validate that this is still going to be continuing an uptrend, we would need to see price come back down, pull back down here, and in order for this to stay in an uptrend, we need the new low that comes in to be higher than this low here. So if the market pushes reverses and it pushes all the way back down here, this just took out this previous low. So that is the start of what could possibly be a downtrend, right? The market moving in a reverse direction. But as long as, right, say market corrects back down and say it pushes back down to here, as long as this low is higher than this low, then this would be your higher low. Now, after the higher low is created, the directional market move is going to be going back up because we're in an uptrend. Now, as soon as we take out this high here, and we even go just a little bit higher, say we're here now, this now becomes your higher high. This is still your higher low. So you have a high and you have your higher low, and you are in an uptrend. The market is moving up in a nice direction. And in a uptrend, when the market is moving in a upward direction, you're going to be looking for buying opportunities. Now, where do these buying opportunities come in from? That's going to be for another video, but just kind of so you can see it, the buying opportunities are going to come in at these areas of interest, right? This is our higher low. So if price does push down into our past high, so anywhere in this range, this is most likely going to be a very nice buying opportunity. And we'll teach you in later videos how to find the exact entry or very close to it that you're going to want to take. And I'm telling you, I'm excited for that education because I'm going to take you guys from the education that we're having here now to next level advanced education to help you get to the next level in your personal trading, guys. I can't wait for to go over that material with you. Super excited, but first we have to go through the process. Remember what I said at the start of this video? Fall in love with the process. We are here for the long time. We're here for the long term, not just for a quick get rich or get one trade right and leave, right? We're here for the long term, longevity, protect our profits, focus on risk management, focus on mastering our emotions, right? Because all these things play a big role in whether a trader is going to be successful or unsuccessful, right? Whether you trade a lot, whether you don't trade that much, all these things are going to play a role in you being a profitable trader or not profitable trader, right? So now that we have our uptrend identified, right? Uptrend, if you guys want to write this down, is going to be higher highs and higher lows, okay? Now a downtrend is going to be the exact opposite, right? If an uptrend is creating higher highs and we're creating higher lows, then in a downtrend, we're going to want to see what? That's correct. If you said lower lows and lower highs and lower lows and lower highs and lower lows, you are correct. That is a downtrend. So downtrend, just a quick recap. Downtrend, we're going to see lower highs and lower lows created. And in a uptrending market, we're going to be looking for higher highs and higher lows. Do me a favor, drop in the chat right now in the comment section. In a uptrend, how do you confirm an uptrend? Do you need a higher high and a higher low, or do you need a lower low and a higher high? Write that in the chat. Answer in the chat. If you're paying attention, should be a quick, simple answer. Now, next question to drop an answer in the chat. How many ways does the market move? If you said two, you missed the third one, right? The third one's right here, guys. Consolidation. There comes a time where the market is indecisive. It doesn't know whether it wants to go up or if it wants to go down. And this is what we call consolidation. This is where the market will move sideways for a period of time before making a directional move, right? So we had some consolidation here. Price broke down, right? So here we go. This is going to be what consolidation looks like, where we have a series of equal highs and equal lows, and price really is trapped, right? It's within a range. It's range moving. It's not. It's range bound. You call it. Some people call it consolidation. Some people don't like to trade consolidation. Some people love to trade consolidation. I'm not here to tell you which is best for you. I'm here to share with you the information that I've learned and taught myself over the last 10 plus years and put it into a simple the, the 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 simplest way I can so your trading journey can get started utilizing simplicity, common sense, and basic technical analysis, some fundamental analysis, and then some a little bit more advanced stuff as we go through the course. But with that said, we have our top-down analysis started. We know what a higher high and a higher low is going to look like. We understand what a downtrend is. It's going to be a lower lows, a series of lower lows, lower highs, lower lows. And now we just went over consolidation. Consolidation is where a little bit of indecisiveness is happening, a little bit of indecision, where the market is maybe it had a impulsive move to the downside or impulsive move to the upside. And now we're just kind of cooling off and we're consolidating. We're getting getting ready to make that next move eventually. We don't know when that next move is going to occur. All we can do is prepare for the move to occur. And then when price breaks out of the consolidation, you usually will have a move, right? So for example, in this example over here on the left, let me just go back real quick. In this example here, right, where we had this sideways consolidation for the most part here, we can see that we had the market consolidating up, down, and boom, broke here, right? Broke here, price pushes down impulsively, pulls back. Now, if we're going to continue this downtrend, then price action is never, this high here is never going to go past this high here because we are in starting to create a downtrend, right? A series of the high, we have the lower high, excuse me, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, etc. Right? So what I want to show you is that after consolidation occurs, we'll have a directional move following. So here we have consolidation, we have a break to the downside, and then we have an impulsive move to the downside. Now, one thing I do want to address real quick is that a lot of times after you break out of this consolidation, after price action breaks out of this consolidation, it does come back and tries to push back into it. And we can see here that price broke down, pushed back up, and completely failed to go back in. This was a little bit of confirmation right here that we are going to, this potentially here was going to be our new lower high. And then the market started ripping to the downside, right, impulsively. So hope that is making sense for you guys. Just quick, right? What do we have here? And this move here, right? We have what is to start a downtrend, right? And this and another thing, you're not going to hear and learn everything in one 15-minute class or one 15-minute video. So it's very important to plug into the playlist, get familiar, get plugged in, and let's start winning together, guys, because there's a lot to learn, a lot to go over, but we're going to make it fun. We're going to make it exciting, but most importantly, we're going to do it together and we're going to win together. So this is Fast Money Futures Chris. I'm signing out. I'll see you guys in the next video. We're going to go to part 2 technical analysis. We're going to go over marking up our charts from our top-down analysis. But with that said, guys, greatly appreciate you, and I'll see you guys in the next video. Bye for now.